Good afternoon, ladies and gentlemen. Happy Sunday, and welcome back to my weekly technical analysis, where I help you establish some direction and trend on price action in the stock market so that you can make better, more well-informed trading decisions and hopefully make some more money along the way. If you appreciate the value that I'm bringing you here, make sure you go down, click that subscribe button, smash that like button, and without further ado, let's jump into the charts. All right, starting off on a daily time frame, looking at the DXY, starting off on the US dollar currency, you can see that price action is kind of trapped within this green consolidation zone right now. Touched the top Wednesday, March 8th, moved back lower, caught a bounce on the 50-day moving average, and then got rejected off of our 20-day moving average, which is that purple line, which leads us to where we are right now. Towards the lower end of this channel, almost came back down to this 50-day moving average. So I would expect a retest this week of either the 50-day moving average or the 20-day moving average, possibly both, depending on how that plays out. But really would like to see here which one of these moving averages is going to end up reigning supreme. Are we going to see the 50 lift price action back up in an upwards direction, something like this, towards the 200, which is sitting above us right now? Or is the 20-day moving average going to support price action lower, back down to the support line at 101.69? Those are the things I'm looking at this week. Let's jump over to the Russell 2000. Russell 2000 sitting right on this support line at 1734. You can see that it is holding strong right now, but price action is pretty heavy. It looks fairly bearish right now. Lots of selling pressure coming in. You can see we haven't really broken above about 1800 pretty much all of last week. One thing to kind of note here as we zoom in just a little bit, if you take a look down here at the RSI, you'll notice that on Monday the 13th, we did put in a low on the RSI, and we are sitting at about that same level on price action, but the RSI is higher. So we do have some bullish divergence on the RSI. Typically what this means is that price action is at about the same point, but RSI is measuring the strength of this move, and what it's telling us is that this move is not quite as strong as this move back here on Monday. So you might see a large reversal back up towards about 1876, somewhere in this vicinity, right about here. That's kind of what RSI is telling us. When you have bullish divergence, typically the RSI will win out over price action. On top of that, there is kind of this nice fair value gap previous week going back to Thursday, March 9th. So we might see that close right about the same level. You can see the bottom of this wick is 1865. The number I said was 1876, only about a 10-point difference there. So keep an eye on that. We might see some type of rejection with this 200-day moving average. That could be short-term or long-term. These are just kind of ideas, but I think in the very, very near future, probably Monday or Tuesday, I think that you will see a fairly decent rejection off of the support line, a move back up in a bullish direction. Moving on to the NASDAQ. NASDAQ did break out of this downward sloping channel. We did get a very nice break on Thursday the 16th, and then a small red day to close. So what I would kind of like to see is price action move back down to about this 12,180 level. We have our support line here that also happens to coincide with the upper end of this downward sloping channel. So I'd like to see a retest, some support, step in here. Maybe we get a lift on the 50-day moving average as well. And then after that, I'd like to see a much, much larger up. That's kind of what I'm looking at. You can see we came right at about the same level that we saw previously earlier on this year in February before we kind of got kicked back down. So I think that this retest is going to be super, super important. That might happen this week. That might happen next week. Kind of depends on how price action plays out. We might get some really bad, ugly candles coming in and just sending us straight back down, or it might kind of go sideways a little bit and kind of slip downwards, nice and slow like so. But that's what I'm looking for. If we do get a hold here, I would absolutely 100% be looking for some longer term swing trades in a bullish direction. So I'd be targeting long positions only as long as this 175 level holds. Moving on to the Dow Jones. Dow Jones still not looking that great. We did break out of our consolidation zone, moved back up on Thursday, kind of got slapped back down by this 200-day moving average, and then a pretty solid red day on Friday as well. So you can see that we are kind of holding this trend line in just a little bit. We kind of wicked it on Wednesday. Are we going to continue to hold it, or is price action going to continue moving lower? One thing to note is we are currently below all three of my moving averages, the 200, the 50, and the 20-day moving average. So this purple line is the 20-day. You can see it's coming down quite fast here. We are probably going to see it cross through the 200-day moving average this week. And then we'll just have to see if that continues to force price action lower and lower and lower, or if we can reclaim that and start moving back up. Now, very best part of this, I'm sure you've all been waiting. Let's go ahead and jump into the trade of the week. We are looking at AI.C3 Incorporated. The ticker symbol is AI. I do have my support zone drawn out here, as you can see. Price action has been respecting it. You can see we had a very large move up, kind of a little bit of consolidation, another large move up, and now we're kind of sitting on the top of this channel above our 50 and our 200-day moving average, but below the 20-day moving average. Now, what I'd like to draw your attention to is price action here and here, and the corresponding RSI movements here and here. Now, just earlier, I was talking about bullish RSI divergence, and what we have right here is bearish RSI divergence. Now, frankly speaking, if I had been paying attention and I had noticed this March 6th when it actually occurred, I would have taken a short probably right there on the spot. This would have been an absolutely phenomenal position. But you can see that we just kind of have continued moving lower since then until we reached our support level. Haven't really bounced off of it with any gusto, and just kind of been going sideways for pretty much all of last week. So the trade idea is this. We had this very large move up. I think it was completely unwarranted. This is entirely based off of ChatGPT, which blew up. This stock has AI in the name. Everybody went crazy, and it just kind of got blown out of proportion. I think we need to see a movement back down towards normal levels somewhere around here. So what I'd like to do is I'd like to wait for a break support zone. I'm not going to wait for a retest. I think this is going to move, and it's going to move quickly. I don't think there's going to be a retest. So we are going to keep kind of a tight stop on this. We'll enter a short position, probably about $20, give or take. Put the stop loss in about 22, give or take. You could do the high on this candle. You could do it slightly above the 20-day moving average, but we are going to target about $14. That would be pretty much the top of this candle, which was at 14.11, and the top of this candle, which was at 14.17. Going back here, you can see it's also been resistance previously, so I think we might see some support step in there. The only thing to note, we have to get through the 200-day moving average to get there. I don't see that being a huge problem, but if you were a little bit less risk averse, you could set it right about here and still have about 1.71 risk to reward ratio. So that is the trade of the week. Wait for the break below. I would enter at about $20-ish, but please do your own analysis and your own risk to reward ratios. Do whatever you feel comfortable with. This is not financial advice, and always remember, shorting is riskier than longing. So please use a stop loss. Don't do anything stupid with your money. I will see you guys next week. Peace out. You're the best.